So micro moments. If you think about the larger context of a buying journey, there are a couple different ways you can look at it. You've got the if we look historically, pre-internet, you had broadcast marketing that would drive traffic into a physical branch location, and hopefully the output was a happy customer or a happy member. Now with the internet, we'll just say 1994 to the present day, you have 5 stages on this buying journey. You have awareness, consideration, purchase, adoption, and advocacy. So that's another way to look at these different stages. But within each one of those stages, at a macro level, there are smaller micro moments that stack up within each stage. Case in point, we are facilitating a website secret shopping study for a community bank that is looking to increase their mortgage portfolio. Well, there are 2 entry points, if you will, to this shopping experience. One would be organic through their public facing website. So either someone would type in the search engine, they'd find the website, they'd go into the public facing mortgage page and be able to make a buying decision that way. They could serve up an ad that would then go, say, from online banking or mobile banking to that page. But what this particular organization is doing is they actually have a micro moment. They are running ads not to the public facing website, but to a landing page that is only accessible to ad traffic. So they're extrapolating the traffic flow from ad to landing page. So the only way you can access this landing page is via an ad. The question is, well, why would you do that? Because you can control the narrative more by isolating that journey. Because let's say you were to run, and we see this a lot of times, you're going to run ad traffic to the public facing website mortgage page. But what happens once you get to the public facing website with the mortgage page? There are dozens of other rabbit holes that a prospective account holder, prospective member could go off on. You go into checking, you could go into auto, and it does happen. And what happens is we know the paradox of choice. More choices lead to less likely of any choice being made to begin with. And so isolating these micro moments, and that's just a very practical example, but I mean, this could be all the way down to onboarding even. If we think about like, what does our onboarding cadence look like for a new account holder? What does that look like in the first 3 days? What does it look like in the first 30 days? What does that look like in the first 100 days? And when we compare and benchmark that against what fintech is doing, fintech is overly communicating via digital channels, specifically email. Chime, for example, sends anywhere between 15 to 20 emails within the first 30 days. SoFi is another example of this. SoFi is, sometimes within about a 72-hour period, SoFi is sending 3 or 4 emails. And the question is well, why? Frequency, attention, mind share, being top of the inbox. And I think there's a misunderstanding that, oh, well, we don't want to spam people. Well, you opted in, you opened the account. One message per email increases the likelihood of the action being taken, particularly in an onboarding situation, where a lot of times we see one email has like 5 different calls to action. One call to action, one message, if you will, per email increases likelihood of follow through. Does that give some context for you there, Katie? Well, I mean, where's an opportunity when you think about micro moments within just the work that you're doing, practically speaking? Like look, just like a low hanging fruit you know what? I could go in and look at that as a micro moment and assess that, diagnose that, and maybe optimize that particular experience, that system, that process.
That is a very good question. That is going to require some thought.
Well,
I've never thought like that before. So
consider
yeah.
this. Consider this. You have the awareness stage, consideration stage, purchase, adoption, and advocacy. So 5 stages: awareness, consideration, purchase, adoption, advocacy. Out of those 5 stages, pick one for one product line, because that's where the complexity begins to set in, because you have those 5 different stages, and within each one of those stages are micro moments that make up that stage. But if you have 5 product lines that you're focused on, well, that's a 5 times 5 multiplier. So there are 5 different possibilities, 5 different stages times 5 different product. Well, that's 25 points on a matrix. I've got limited time, capacity, resources, capital. Pick one. And from just the one that's going to influence the value for either A, the account holder, preferably, because if we influence the value created for the account holder, then we're going to increase the value created for our organization. So one product, one stage of the buying journey. Start there.